wow, we got quite a spike on Thursday and then into Friday. There's all kinds of different voices talking. What should you do in this situation? Well, let's talk about that next. All right. Well, welcome back. Yes, so as the headline says, we did get quite the spike on Friday. Let's pull up the VIX here and take a look. So Thursday spike comes into Friday morning and everything backs off. You had a chance to cover if you'd sold stuff on Thursday late in the day. UVXY goes down below 38 and then boom, market sells off again. Everything spikes back up. Here's a look at the VIX over the last couple moments. Let me get out of the way here. And let me see if we can do a little bit better than that as far as charts go. All right, so there's the VIX last couple of days. And I want a different view. Let's find another view. All right, so there's the spike in the last 2 days. And you can see, first day, boom. And so this is the VIX. Now let's look at UVXY. All right, so you see first spike, UVXY backs off. You could have sold 41, but definitely 40, and then you could have bought back 38 here on the open. Goes, coming in, and then boom, on Friday again, spikes up. And so what are you supposed to do in this situation? And, StockTwits is going to tell you, every time there's a spike, StockTwits is going to tell you that this is the end of the world. Buy it. Well, it's kind of a mixed bag here, but there are some traders who I respect a ton on here who are spooked and who are not laying into this and who are long it and think this is different. There's some big guys on here. This guy, Sneaky DNA, is a awesome trader, and I highly respect him. There's a whole bunch of guys on here who, obviously, Vix Hulk, a whole bunch of guys on here saying different things. So what's going on here and what should you do? All right, so every year the VIX has a few spikes, and the really scary thing happened in February where there was just a huge rip up. Let's take a look at a 3-year chart here of the VIX. And February was that huge spike. There you can see it. Making sure I'm not in the way here. Okay. There is that huge spike. But you see there's mini spikes all throughout the year. Let's go to a 1-year chart here. Okay, so this is 180 days. So you see there's spike. It's kind of like an oscillator. It's up, down, up, down, up, down. There's a lot of people that are a bit spooked right now. And what I like to do a lot of times is I like to try to find people who are, quote unquote, your average investor, not retail traders, but just normal people who have, are following the market, have some sort of investment, but aren't pros in any way. And I like to hear what they say. And you should do that too. Go out and sort of quiz people around you in your life that might know something about the market. And if you find that, if I find that a lot of people are afraid the market's going to crash, then I see that as a bullish indicator, because if a lot of people are afraid, then the downside isn't being ignored. And if we, a lot of times also in this sort of situation, what I'll do is I'll try to back myself out. When you're trading like UVXY and it's one day, you've got your daily chart out and you're focused in on what's happening that moment. Here's the daily chart. You see, okay, it's spiking from 37 up to 43. Seems like the end of the world. Well, I like to try to get some perspective. Back that out to 10 days. Okay, now we see there's a big spike. Back that out to, 180 days. Oh, okay. Well, 180 days, this just looks like a blip on the chart. It actually looks like maybe a selling opportunity as we wind lower. And try to get some perspective on things. Now, of course, the VIX is a derivative of the SPX. So really crucial to check out your charts on the major indices, because this is where it's all coming from anyway, right? So let's take a look at what's happened to the major indices charts. I'm going to go out to a year chart here, okay? So a year chart, we can see it's off the high a little bit. You see it going up, 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 and then boom, down a little. You can go back to that February area, and you can see the big down move. Well, this move right here is nothing like that big down move. It is a down move, though, and you can see it. We are off the highs a little. And then I think, what's going on in the world? Well, obviously the Kavanaugh thing has been going on in Washington. What sort of fundamentals are there that are affecting the economy, this sort of thing. Is there some serious event that's causing the market to spook? And the answer is, to me, no. A lot of people have been, concerned about the midterm elections and this sort of thing coming up. This is the time of year when there's, when the crash happened. Black Monday was this time of the year. So people generally, they're back from their vacation and stuff. So there's definitely sort of rock and roll in October. But is this all justified? What's going on in commodities? What's going on in gold? And actually, gold really hasn't rallied very much. With the market way down, you would think gold would be popping, but it really hasn't. So all this being said, I'm focused, like a lot of people are right now, on the MJ stocks. And MJ stocks really didn't crack at all with the sell-off. Facebook's woes have continued, of course. And my colleague David Modell linked to a article on Facebook saying, well, it's just gotten battered down. When's the turnaround for Facebook? And indeed, I've been watching that closely as well for some sort of turnaround in Facebook. But volatility-wise, let's take a look at the term structure here. And I want to talk about my trades also in a second, but because I didn't do the greatest job trading this week. But we'll get back to that in just a second. Okay, so term structure. Is the term structure freaked out by this move? I would say no. You got a lot of people talking about, oh, we're in backwardation, blah, 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 on StockTwits, and we're not in backwardation. In fact, I haven't seen the curve move into backwardation at all. I have seen in the spike, the spot price did get above the futures a little bit, but the curve is still where it is. Noticeably, and I must not be the first one to comment on this, but noticeably the curve pretty flat to the far out regions. In a way, it would be nicer for us if we could get those far months up a little higher, so that we've got more of a more room to have a bigger contango moving forward. Ultimately, what we would love is that third month, in this case, DECE, being way, way, way high up, so that when it comes online, it has a long, long way to fall towards spot. That's what we would love for contango purposes. But term structure, really not that spooked. Okay, so let's get on to some trades. If you had been following a short vol strategy, maybe you were calculating, okay, well, this thing's decaying like 2 points a month. So, by December, it should be, UVXY should be, 30 or something. And if you're short UVXY or VXX, you got run over this week for sure. That's what happens when vol spikes. So the question is, do you take the loss and move on? Do you hang out and it will definitely come back down? Or do you double down and get short more? Or do you get long? There's several choices here. And for me, the answer is simple. I'm committed to a short vol strategy, which and my rules for myself are I'm either flat or I'm short. So that takes out any of this ideas of like getting long this thing right now. People are a little spooked, definitely. You know, it was painful to sell into Thursday, which I certainly did. I posted buying the October 4038 put vertical. Let's just go over that for a second. I got short UVXY by buying a short-term put vertical with 15 days to go, and boom, it went in my face. It was a winner almost right away. I bought this put vertical for once again, it was the October UVXY 4038 put vertical. So I bought the 40 put and I sold the 38 put, and I paid $1.26. It's right around $1.20 right now. Paid $1.26 for that, or sorry, $1.23 and $1.24. And so what is this trade? Okay, well the put spread could ultimately be worth $2 if UVXY is at 38 or below on expiration in 13 days. Okay, so you're paying $1.20 for something that could ultimately be worth $2. Now the risk here is that you run out of time, that this volatility spike stuff keeps hanging around for more than 13 days, which it could very, very easily do, and you run out of time and this thing goes out worthless because, you know, the UVXY is over 40 at the end of expiration. So not a real advisable trade for high probability. For high probability, we'd much rather have more time, because I can't tell you what's going to happen to UVXY in the next week, but I can tell you 2 years from now it will be lower. I can tell you 1 year from now it will be lower. So when you're making trades in this environment, the first big thing to take into account, you need to give yourself enough time for any volatility spikes or whatnot to recede, to go back down. We don't need the VIX to go back lower to make money. It can stay here. It can even go a little bit higher, because the term structure will adjust itself back into, I mean, it stayed in contango the whole time, but it will adjust itself to be in bigger contango as soon as things just stabilize. So VIX could go to 20 right now, and if it just stayed at 20, your position would ultimately make money if you've given yourself enough time. So most important thing, give yourself enough time. So this is how I needed to adjust when I came in Thursday, and stuff came in at first, and then it spiked against me. What I did was I made it my priority to move my position out in time. Okay, so if you're scared that volatility is going to remain for a little while, okay, you can still take advantage of the situation. This is an excellent opportunity here to initiate a short vol trade. And it might go against you. This could pop a little higher, but it's still an excellent opportunity. It's a much better time right now. I mean, this is going to sound obvious to you because it is, but it's a much better time now to short UVXY than it was a week ago, because UVXY is much higher now. But you need to give yourself enough time, and you need to be smart with what sort of way you are going to short it. And, you know, a lesson that I learned with that Volmageddon thing was I don't want to risk my entire account on a spike. And by that, I mean, I don't want to sell naked options. I don't want to just naked short calls. I want to put trades on that have a defined risk. I know how much I'm betting, and I know how much I could make or lose. I need a defined risk, because if things don't go my way, I need to know how much I could lose. Okay, so I stick nowadays to just dealing with vertical spreads for trading the VIX, and I stick with UVXY and VXX. UVXY can be a little bit trickier to trade options-wise because the markets are wider, they're a little bit less consistent, and less liquid. So when you're trying to get stuff done, it can be harder. You're going to usually have to pay more than just the midpoint to get something done. Or if you want to sell something, you're going to have to sell it lower than the midpoint of the spread. Whereas VXX, a lot of times you can just sell stuff at the midpoint. So harder to so first, most important thing to realize is time is on your side. So give yourself enough time, and you'll always win on short vol strategies. Now the question is, what's enough time? Because the farther you got in time, the less return on investment per year, or whatever metric you want to call it by, you're getting. You would love to bet $1,000 and make 200 in a week, as opposed to betting $1,000 and making 200 in 2 years. But there has to be some sort of happy medium. The other question is, which sort of strikes do you want to select? The UVXY spikes to 43. Do you want to make a Do you want to do a strategy that says for sure UVXY will be lower than 43 in 2 months, or would you like to make a little bit more aggressive bet that UVXY will be below 40 in 2 months? We look at the chart here. Okay, here's October, July. This is half a year. Okay, so where do you see UVXY being in 2 months when you look at that chart? Nobody knows the real truth to that, but we can still go back to our metrics of calculating contango, because we know that contango is going to decay UVXY. That's the one thing we definitely know. And contango right now has really contracted. So let's use current contango as a conservative way. Likelihood is it will go back to where it was at some point, but let's use current contango as a conservative way of calculating the decay on UVXY. So right now, contango 1.77%. So if we take 1.77%, so 0.0177 times the price of UVXY right now. So that's 71 cents with contango the way it is and nothing happening to volatility. So without any contraction, expansion, whatnot, UVXY will decay about 71 cents per month moving forward from here. And this is very conservative, of course, because we're kind of in the middle of a spike and everything. But still, we could use this and say, okay, 71 cents. So that means in 2 months, it's definitely going to be down $1. In 4 months, it's definitely going to be down like at least $3, let's say. Or I'm sorry, 3 months, let's say $2. So we can use that to make a bet. Okay, well, if it's going to be down $2 in 2 months, then we could go out 2 months, and we could pick maybe December. And so if it's going to be down, if we know it's going to be down $2 in 2 months conservatively, we could sell December. So 40 minus 2 is 38. So we could sell the 38.40 call spread in December. Sell the 38 call, buy the 40 put. And the midpoint here is 58 cents. I think that would be lucky if you could get it for that price, but somewhere around 50 cents would be amazing also. But essentially, we're looking at strategies for this to be at or under $38 in 2 months. That seems very reasonable, and sort of the odds are with it. What's most likely to happen when we get a spike like this is vol goes back down right away. That's the most likely thing to happen. But if it doesn't happen, we still want to give ourselves enough time to be profitable. So you could do something else. You could say, all right, well, instead of selling something at the money, maybe now that we've had the spike, I'll sell out of the money calls, because the likelihood is we're not going to spike higher, and we still have that 70 cents a month helping us to the downside. So you could go to December, or you could go out to January, and you could say, all right, well, I'm going to sell the January 45 call vertical. And because my feeling is that based on my math, this is going to be down 71 cents a month. It's going to decay by 71 cents a month, and even if it stays at the volatility level it's at now, that's going to happen. But UVXY has other things. It's got beta drift. It's got contango, and the likelihood is that volatility is going to come off between now and January at some point. So you could sell the 45 call vertical in January. Now, the thing psychologically with a spike is that in these times when stuff is spiking, everybody's afraid. People are afraid that the market's going to crash. You're going to see fear. There's blood in the water. You might have already lost a little bit of money. Definitely, if you're pursuing short vol strategies, it's gone against you already a little bit. And it can be really hard to pull the trigger when everybody's telling you, no way you should short this. I saw people posting that UVXY will be 70 bid next week. UVXY is going to 70 next week, and then it's going to 100, and then it's going to 1,000. In that environment, it can be tough to go. It feels like it's going against the grain to sell something, and but that is your moment of opportunity, is during the spike. And I guarantee to you, when 9 times out of 10 the smoke clears and nothing happens, and this goes back down, and UVXY is back to 35. If you've been following this stuff and you've been into volatility for the last few months and you didn't sell anything up here, you're going to be kicking yourself. I guarantee that to you. Once again, all disclaimers out there. VIX can pop a lot higher than here. VIX could go to 20. It could go to 30. I would not leave yourself in a situation where if it spikes way higher, that you're going to lose all your money, that you're going to blow out, that you're going to owe money. I wouldn't be trading on leveraged things. I wouldn't be trading on margin. I wouldn't be putting all your savings into this sort of strategy. But this is an opportunity here to short this. That's what this is. And, making money on the market, you have to take it from someone else. You have to take risk. There's risk here, certainly, but this is an opportunity to short this. And much better spot to start a short vol strategy than when the VIX is 11, right? If you have followed my discussion with Mark Sebastian, he talks about different ranges of volatility, level 1, 2, 3, 4, 5. And most of the time, the VIX hangs out around 12. Most of the time. Right now, it got up to around 15. It got up to 16. And like I said, the higher it goes, the more people want to jump on board and get long this thing. But you're starting to see more and more people being aware of the fact that this usually goes back down when you look at StockTwits. And hopefully that's due partially to the Facebook VIX group and whatnot. One of my co-moderators, Mike, was saying how it's real quiet in there. I do believe some people did get kind of run over on this, but that happens with spikes. Of course it does. That's why it can be a great strategy to hang out with a very small position when nothing's going on, because then when you get something like this happening, you have the opportunity to, it's a great thing if you just come in with, if you have no position and you come in with cash on on Thursday or Friday, and you can initiate something when it's already spiked, because then you're not bleeding on the way up, and you can initiate something and make some nice money pretty quickly. But a lot of us obviously have these long-term positions on that are short, and so it's a little bit painful here. But ultimately, it's an opportunity. It's something that you have to have conviction with and kind of wait it out. It's a little bit of a patience game. But I guarantee to you, the VIX is not like a stock. It doesn't just take off to the upside and never come back. Look at this. Let's look at this chart once again. You can see it oscillates back and forth, up and down, up and down. And I can guarantee to you this particular up move will be followed by a down move. We might get another day up. It might go higher, but it will eventually be followed by a down move again. Look, the VIX went from 11 to 17 in 2 days and frightened a lot of people. And cause some serious damage to some people's P&Ls. But once again, opportunity, and the biggest opportunity is when the people are most scared, which is when this was up around 16.5, 17. And I can guarantee to you, I had to work a side job, but I was going to the side to put on positions during the day on Friday because I recognized that this is one of the few opportunities of the year when we get a spike and you can actually initiate a position that can work for you for the rest of the year. So there you have it. Once again, in the stock market, the only way to make money is to take it from someone else. So it's not easy out there. It's not obvious what to do a lot of the time. There's opposing views all the time, certainly. And there are a lot of people, if you took a poll, there's a lot of people kind of on the sidelines waiting to see how this stuff plays out on Monday. But my feeling is if it plays out to the downside, it's going to be too late to get involved with this, once it's over. So at some point, you're going to have to step up and place your bet one way or the other. And I think there will still be time Monday, UVXY above 40, and an opportunity to jump on the short vol train here. So I wanted to come out and talk about this because I've been a little bit silent this last week. I've been actually having connection problems with the internet. First, I could only use a hard wire, and then I can only get the internet to work on my other computer in the other room. And finally, I've got it back up and going, and we're back. Busy stuff going on in the rest of life, but definite opportunity here in UVXY and the VIX. And so take advantage of this, folks. I know it's hard to sell when others are buying, but that's kind of the situation we're in right now. Anyways, thanks so much for watching. Let's see. Let's take a look at the chat here. And hey, James, what's going on, buddy? Nice to see you. Thanks for coming on. Hey, Ron, what's going on? David Shapiro, nice to meet you. Hey, what's up, Oliver? Good advice. Take a step back. Yes, congratulations on the win. Was not mine in our little bet on Friday because I was not in on time. The rule is that you have to be in guessing we have this group that we guess the closing price of UVXY every week, and the rule is you have to be in with your guess by 11:30. I was at work and couldn't get my thing in, so I believe you know who won. I knew the timing thing, and I was late, so mine doesn't count. I think you know who won. I'll leave it to Ron to make the official announcement or call or whatnot. So let's read through this stuff a little bit. Yeah, Ron Turkey, don't get overexposed. It can keep spiking. Definitely true. You always want to have extra bullets. I know it gets exciting, and people love to like go all in. I'm all in. It's like it's very tempting to take all your money and bet it on one thing, but try to hold back, folks. Let's see. James says, I trade off of defined risk, usually only holding for a few minutes. Great. Sounds great. Good advice for other people, too. Sometimes I'll increase my core on huge spikes up. Yep, that's my idea of a good strategy, is to have some sort of core short VIX position on, and then kind of trade in and out of it a little bit. I know one of my buddies, he will, when it does get down to like 11 or something, he will actually sell a couple out of the money puts in, I think he just trades VXX, but he'll sell a couple out of the money puts, that's UV, and actually kind of get flat or long when it's way down there just a little bit. Well, it's actually, I mean, it's getting long, but it's getting long in a very specific way, which is to sell out of the money puts. So it's which I guess the terms getting long, getting a short are terms for stock traders that just have those two things you can do, get long or get short. But for options traders, if you're selling way out of the money puts, in a sense, it is giving you a long delta, but you're only getting long if it goes lower. So you kind of have to qualify that. I wait for VVX to tap 80 range before doing the money bull put. Yeah, VVX, short vol show, or I'm sorry, the Options Insider, I'm bummed. I was invited to go on volatility views this week, but I was unable to do it because I had other engagements. But they get very into the VVIX, and VVIX is not as meaningful to me as it is for some people. I know that obviously so VVIX is the volatility of the VIX, so it's looking at options implied volatilities in options on VIX futures, and I just pulled it up there. As it gets higher, obviously it implies, or it tells that people are coming to buy VIX options. But a lot of times it just hangs out around this 100 level and isn't super meaningful. And so I don't use it that much as an indicator myself. And let's see, David Shapiro. About UVXY for call for alternatives. Yeah, so you're talking about a what we like to call the poor man's covered call, which is to buy a far out option, and then a far out call option, and then sell other closer stuff. Sometimes, usually at a higher strike against it, and that can definitely be an effective strategy. So you're short the 40 strike call and long the 23. Yeah, that's selling premium that gets you sort of account incoming credits on short calls to reducing my basis. So you're basically, David, trying to finance a long strategy in UVXY, and it's going to be a tough struggle to finance that. Hopefully you get the up moves at the right moments and you can trade it well enough to be effective at doing that. But that's a tough strategy to pursue in UVXY. I do think it's an effective strategy. I would be more inclined to use that with a stock that I feel I'm bullish on, and when I'm looking at to do a sort of covered call or strategy of being long a way maturity call, and being short out of the money calls in closer months. One stock I'm considering doing that sort of strategy in is Facebook. Let's pull up Facebook for a second here. So what we would be talking about is like buying in Facebook, say a March 19, let's say March 19, 150 call, and selling against it a call with a higher strike that's closer to expiration. So maybe like November 70 call. So let's see. So March 19, 150 call versus no 70 call. And this way you are getting a little bit of a long delta, and you're collecting a little decay at the same time, and essentially, it's a bullish strategy that also includes a little income. And what you can do is once NOV comes off, you can sell another call against it and keep doing that. It reduces your cost basis as you stay long, and but it's something that you are bullish on. For UVXY, I'm not really bullish on it, so I'm not looking for strategies to reduce my cost basis and stay long it. I might actually do the reverse of that and buy a in UVXY, buy a put like the I don't know, maybe like the Jan 38 put, and then sell. Sorry, let me fix this here. Do something like buy the Jan 38 put, and then sell out of the money puts like October 34 put, something like that. And it's a very similar strategy to what you were talking about, but it's a bearish strategy instead of a bullish one. Don't hold the long call till expiry. Right. Gotcha. But I appreciate, I'm definitely impressed with the sophisticated strategy. That's definitely interesting. So anyways, I'm going to wrap it up here without getting too specific here. I appreciate everybody checking in. Stay safe out there. Be limber. Take whatever you were going to do and cut it in half, because it's always great to have that extra cash on the side to have for opportunities, because there's always more opportunities in the market, folks. I don't want people to come out and say, oh, I missed the spike. There's nothing else to do in the market. No, there's always stuff to do in the market. I'm watching the marijuana stocks closely. They really didn't sell off at all during this down move. I've been following Afria, and it's stuck right where it is. I don't get a feel for this one. I'm just going to pull it up real quick. It definitely has room on the downside, but I don't get a feel for what's going to... Here's the 1 year of Afria. Tough one to figure out. Tilray, hanging tough here. Hanging tough here. Volatility coming in a little bit, which makes sense. I don't really get a feel on this one either. It could break up, could break down. NBEV, another one that's like very hard to figure out. I have a friend who just started trading stocks, and he's been dabbling in a bunch of these, and he's actually been successfully making money, which is great. But a lot of these really feel like a crapshoot to me. Thanks, James. Thanks for all your support. And I notice you, James, following a whole bunch of other people, and I get turned on to new stuff to follow by seeing who you follow. So thanks, James. So term structure, would love to see the farther out stuff curl up a little bit more. We'll see what happens Monday. I think a lot of people have been following and nervous about this judge thing possibly, and it seems like the judge thing is going to go through, and it just could set up very easily for a big rally on Monday, I think, with that particular uncertainty out of the way. There's not a big specific thing that's going on to tank this market right now. It doesn't feel like. Now, look, once again, anything could happen, and you could look back Monday and everything could go a lot lower on Monday. It's certainly possible. So stay limber, stay small, and good luck to everybody. Thanks for watching, and I will see you in the next show.